In early 2024, if you asked any economist about China, they'd have told you the same thing. The world's second-largest economy was headed for a historic collapse. All the ingredients were there for a perfect storm. A catastrophic property crisis, mountains of local government debt, and consumer confidence that had all but vanished. The world was basically holding its breath, waiting for the implosion. But then, the official data started to roll in, and it told a story so different it was almost unbelievable. China's exports didn't just hold on, they surged to record highs, making a fool out of just about every prediction. The numbers were so strong they seemed to defy economic gravity. This is the story of how everyone got it so wrong. But more importantly, it's the story of why this so-called boom isn't a sign of strength, but a terrifying warning sign. The calm before an economic superstorm. The doomsday narrative. To really get the shock, you first have to understand why everyone was so convinced of impending doom. For months, the narrative was crystal clear. China's domestic economy was a sea of red flags. The most glaring problem was the property sector, an engine that once powered a third of the entire economy. In 2024, investment in real estate development was in free fall, contracting by a staggering 10.6%. This wasn't just about empty apartment buildings. It was a crisis that vaporized household wealth, crippled developers, and left local governments, who depend on land sales for income, staring into a financial abyss. This real estate implosion kicked off a vicious cycle. With their life savings tied up in falling property values, Chinese consumers slammed their wallets shut. This collapse in spending at home was obvious in the country's import data, which barely grew at all. Chinese businesses weren't buying foreign parts, and its people weren't buying foreign goods. Add to that the constant pressure of U.S. tariffs, with threats of more to come, all designed to choke off China from its biggest customers. So you had a perfect storm, a domestic economy where prices were falling, a population too scared to spend, and its main export highway barricaded by geopolitics. The logical conclusion, the one reached by nearly every analyst, was that China's export-driven economy was about to slam into a brick wall. A collapse didn't just seem possible, it seemed inevitable. The shocking data, and then the 2024 numbers dropped. Instead of collapsing, China's exports surged by 5.9% for the full year, hitting a record-breaking $3.58 trillion. The final month of the year was even more stunning, with a 10.7% year-on-year jump, blowing all forecasts out of the water. To top it off, China's global trade surplus, the gap between what it sells and what it buys, also hit a new all-time high of around $992 billion. It just didn't make any sense. If China's own people weren't buying, and Americans were supposedly buying less, who on earth was soaking up this colossal wave of Chinese goods? This is the central mystery that left economists scrambling for answers. How did a country with a crippled domestic economy manage to sell more to the world than ever before? The answer isn't in one single place, but in three critical truths that paint a picture far more complex and troubling than the headlines suggest. The real reasons for the surge: first, there's what you could call the Great Pivot. While exports to the United States did fall under the weight of tariffs, Chinese companies didn't just throw in the towel. They got creative and aggressively rerouted their goods. In 2024, China's exports to the ASEAN nations of Southeast Asia grew by a massive 12%. Exports to Latin America jumped by 13%. For 5 years running, the ASEAN bloc has been China's largest trading partner, not the US or Europe. This wasn't a fluke. It was a deliberate strategy to find new, hungry customers and build a bypass around Washington's trade barriers. The second reason is the rise of what Beijing calls the New Three: electric vehicles, EVs, solar panels, and lithium-ion batteries. While the world was fixated on tariffs on old-school goods, China was busy cornering the market on the tech of the future. In 2024, exports of ships, semiconductors, and cars surged by over 15%. This wasn't about selling more t-shirts. It was a calculated play to dominate high-value industries. China isn't just the world's factory anymore. It's rapidly becoming the world's showroom for green technology. But the third and most important reason reveals the dark side of this export boom: the price illusion. A closer look at the data reveals something deeply concerning. While the value of exports grew by nearly 6%, the volume, the actual number of things being shipped, grew much, much faster by around 12 to 13%, according to analysis of global trade data. Think about that. It means China was selling significantly more stuff, but was getting paid less for each item. This is a classic sign of deflation. With no one buying at home, Chinese factories are slashing their prices and dumping their excess production onto the global market for whatever they can get. This boom, then, isn't a sign of healthy demand. It's a symptom of profound domestic weakness, a fire sale to keep the lights on and workers employed, even if it means sacrificing profits. The calm before the superstorm, and this brings us to the twist. This whole export surge is built on a foundation of pure desperation. With its own consumers AWOL, China has no other choice but to force the rest of the world to absorb its massive industrial overcapacity. It's exporting its domestic crisis. But the world isn't a limitless dumping ground. This flood of underpriced goods is a direct threat to industries in other countries, from steel mills in Europe to auto plants in America. The backlash is already starting. We're seeing proposals that could escalate this into what some analysts are calling economic nuclear warfare. The prospect of a new Trump administration, for instance, has brought with it the widely discussed threat of a blanket 60% tariff on all Chinese goods. That's not a trade spat, it's a paradigm shift that would trigger a global economic earthquake. The impact would be immediate. First, you'd see price shocks everywhere. Everything from iPhones to furniture would become dramatically more expensive. Second, it would unleash total supply chain chaos. For all the talk of decoupling, the world is still profoundly dependent on China. No other country, or even a group of countries, can replace its manufacturing might overnight. It would take years, not months, to rebuild those supply chains, leading to shortages and even more price hikes. The global ripple effect, and this superstorm won't be contained. Its ripples will hit every corner of the globe. Take Africa, where the relationship is complicated. For 16 years, China has been Africa's largest trading partner, with trade hitting nearly $296 billion in 2024. While exports from China to the continent create a massive trade imbalance, a crisis in China could also cripple demand for the raw materials, the copper, cobalt, and oil, that many African economies need to sell to survive. Europe is completely caught in the crossfire. The continent is already struggling, and China's export machine is a big reason why. Germany's legendary car industry, for example, is getting hammered by a wave of high-tech, low-cost Chinese EVs. A full-blown trade war would force even more cheap Chinese goods toward Europe, threatening to wipe out local manufacturing and jobs. For the United States, it's a paradox. Despite years of tariffs, the U.S. goods trade deficit with China was still a massive $295.5 billion in 2024. This just shows how tangled these two economies are. Ramping up tariffs will almost certainly mean higher inflation for American families and fragile, unpredictable supply chains. And in Southeast Asia and Latin America, it'll be a mixed bag. Countries like Vietnam might see short-term gains as some manufacturing moves. But they don't have the scale to truly replace China, and they'll also find themselves competing against a flood of ultra-cheap Chinese products. Meanwhile, commodity exporters in Latin America will face the same collapsing demand as Africa. So when you step back, the story of China's 2024 export surge isn't a tale of economic triumph. It's a story of desperation. The numbers that shocked the world weren't hiding strength. They were masking a deep, structural weakness in China's economy. Beijing managed to dodge a bullet in 2024 by pushing its problems onto everyone else. But that's a strategy with an expiration date. The coming storm of tariffs and retaliation threatens to turn this temporary fix into a full-blown global crisis. Analysts are modeling a few scenarios for 2025 and beyond. But with threats like 60% tariffs on the table, the probability of a hard crash, a global recession that starts in Asia, feels frighteningly real. The export boom of 2024 wasn't the end of the story. It was the final deep breath before the plunge. If you want to keep making sense of the hidden forces shaping our world, make sure you subscribe for more analysis just like this. Thanks for watching.